welcome. You're watching Business Today Television. I'm Sakshi Batra and this is Market Today, a show where we'll help you understand the trading setup and the market strategies you need to follow for this trading session. Well, the benchmark equity indices definitely closed in the green yesterday, snapping their 2 days of a losing streak. It was the shares of Apollo Hospitals and Hindalco post earnings that contributed positively to the index. There were also heavyweights like HDFC Bank and Reliance Industries that also pepped up the stock higher and the indices higher as well. Now, what happened overnight is that we again witnessed a strong session on Wall Street. It was the second straight day of 400 plus points gains for Dow Jones as well. Remember, Dow Jones is now up nearly 1,000 points in the last two trading sessions. In fact, we are also seeing that it's just 150 points away from the record high levels. Whereas S&P 500 and Nasdaq, they underperformed, but they definitely ended at the closing record highs as well. And most of the big tech stocks, although ended lower on Wednesday. Now, US dollar index, it fell below the 98 odd mark. That's something that we can look at. Whereas the alternate investment class like Bitcoin, that reached an all-time high again on Wednesday night, rising in tandem with the US stock markets. There are global investors that are demonstrating greater appetite for risk that is leading to all asset classes moving higher together. Now, what's happening on the Asian markets today? They're trading in a narrow range and mixed as well. We've seen Nikkei down by 1.3%, Topics down by about 0.9%. Kospi is just flat with a negative bias, whereas ASX 200 is up by 0.6% and Hang Seng Index is also up by about 0.5% in trade. GIFT Nifty, meanwhile, is indicating a start at 24,694. Let's see how really the day pans out for us back home. But let's also welcome our guest on board. We have a very special guest joining in. Mr. Deven Choksey joins in. He's the MD of DR Choksey Finserv Private Limited. Warm welcome to you, sir. Thank you so much for taking the time out. Independence Day greetings to you and to your loved ones. We celebrate very proudly the day tomorrow. But at this point in time, a lot of uncertainties are looming large for our country, both globally and locally. When we talk about global factors, we've been talking about the tariff front, I think, for the last 3 months with you now. Of course, towards the end of it, nobody would have anticipated that India will get a raw deal like a 50% tariff. How would you really look at the room that is left for us to negotiate a better deal for us even now, sir?
So good morning and happy Independence Day in advance to all of us. May God bless a lot of prosperity to our country.
Thank you so much, sir.
Well, I think when you march on your path to higher growth and become a leader in the world in various aspects, obviously you are going to face a lot of hurdles. And those hurdles are going to be part of our journey as a country, as a nation. This kind of tariff and all, they are not sustainable. That is the first point. Second point, they are counterproductive. It hurts more to the nation who has imposed those tariffs versus I think the nation who is basically on the other side. So we believe that I think even though this particular tariff has been levied for a variety of reasons or whatever you want to term it as, I believe that they are not going to be a lasting impact. And probably whenever this situation gets normalized, you will probably see a very beautiful sunrise coming out of it. In the sense that I think this kind of disruptions, they definitely mean it's a big thing. Because whenever there has been a disruption in past, I think the following events and following times thereafter have been extraordinary for the country as a whole. So I would have that kind of a faith and understanding on this subject. So I'm not worried about the tariff at this point of time. Believe India's economy is more internal driven and has a market on its side. So certainly as against 4% population that America commands across, I think, of the global population, the India and China put together, they have 40% of the total population. So I believe that I think that's a number which one will have to, I think, look at very seriously because this is a market that nobody can neglect here.
One more point, and then we can move on to our local factors as well. And this is, tomorrow's meeting that Donald Trump will have with Putin. And of course, Prime Minister Narendra Modi will be giving us a speech as well. Later this month, we also have a meeting with China. How are you looking at, the kind of new world order that is developing at this point in time? How is that likely to impact our larger economy and the way we function over the next few years, sir?
To my mind, I think this century belongs to the collaborations and cooperations. This century do not belong to the competition. The competition in its own right is welcome, but the fact remains that I think when two nations collaborate and cooperate with each other, they actually prosper, and the people within those nations they also prosper. So that's what this century is defined as, in my understanding. And I believe that I think whatever may the hiccups that every nation may be finding, I think they will ultimately find a solution. If America has an objective to make the country great, I think it's a brilliant objective. There is nothing wrong with that objective. The method has to be improvised so that at least I think the objective is fulfilled for the people of the nation. And same is the situation with I think Russia, Ukraine, Israel, Palestine. I think all those places I think where you are having a war-related situation, I believe that I think the situation will find out its own way, and probably I think we will see the better trade tomorrow. So let's hope for the best. I believe that every meeting among the leaders, I think, is best expectation that one can carry for the tomorrow to come.
Absolutely. Now, Mr. Choksey, help us also understand, when it comes to our domestic own factors, we were banking on our earnings trajectory to probably pull the markets higher. That really hasn't taken place in Q1. We are in the fag end. If you could highlight for us what have been your top 2 or 3 takeaways from the earnings season that's panned out, have there been any red flags that you've been able to point out? And are there any green flags or green shoots that are already indicating of a recovery in the next quarter, sir?
So to be on a positive side, I think the cost factor has been significantly to the advantage of variety of industries. In fact, most of the industries have seen the benefit of lower cost, and that is, I think, giving a good promise for the current financial year, because we are just in the first quarter, we have completed, and we are now moved into the second quarter. I believe that I think given the kind of cost structure that we are experiencing in the current financial year, it suggests that I think the companies will come up with a better than expected profitability and the profit numbers at the end of the full year. And this situation could possibly last for another 2 years, which means if the calendar year 25 and sorry, financial year 25-26 and financial year 26-27 are the 2 years if we are counting on, I believe that I think these 2 years are likely to show relatively smart profit performance from most of the companies, despite of I think some of the global adversities. That is the first point which I believe has come out of this result season. Second thing, though muted at the top line, I think most of the companies have been resilient to any kind of downward pressure. And that is again, I think, an important point that I am observing. Third point which I am observing, most of the companies have actually, I think, got the plans in place for deploying their free cash flows into the investment into different areas of the businesses. And they are actually, I think, also implementing AI significantly. So which is promising that yes, going forward, sustainability factor also is likely to remain stronger in many of in many of the companies within the industries. So relatively, we remain, I think, more confident and optimistic about the prospects going forward. Of course, I think the near-term hurdles, I think one cannot overlook. Yes, they will be there, but I think they will be creating further opportunity for investors.
Okay. Deven sir, help us understand on the valuation part. After 6 weeks of consecutive negative returns that we've seen on the markets, do you find any pockets that have now come to a very fairly to an attractive value kind of a space where you can actually spot in case someone is a long-term investor? This may be in the hindsight probably the best time to start accumulating those spaces?
So in the corrective downside, we like auto and steel. In the corrective downside, we also like metal and the real estate. We also like some of the commodity in the chemical commodity space, particularly who are getting to specialty chemical space, particularly those who are getting to the pharma space. I think they are the ones I think where we probably remain relatively more optimistic and confident about within the core sector. The larger thing remains intact about power and power utilities. We believe that I think capital goods segment connected with power and power utilities is the one which is going to be the better off in coming times because of the higher amount of capex program that the government has undertaken, in different segment of power, be it thermal power, wind power, solar power, hydropower, or even now the compact nuclear power
Hmm.
plants, I think, or the biogas plant. I think in each and every area, or even for that matter, hydropower, wind hydro. So I believe that I think overall the power sector and the utilities within power sector, they are expected to produce relatively better performance. Of course, I think one you have to spot good opportunities within that from investment perspective. But that remains, I think, a favorable space too from the point of view of looking at portfolio construction.
Okay. You know what has also been encouraging, sir, in this, despite all the shakiness in the markets and all the volatility, is that the domestic liquidity continues to be strong. We've seen that in the recent, numbers of SIPs that we have seen. We've also seen in the equity mutual fund flows that have come in the highest ever, upwards of 40,000 odd crore rupees. So it signals that, the retail investors definitely are turning more mature and are having that confidence in the Indian markets despite and looking beyond the near term as well. I have to understand from you, when one continues to put in the money in the markets through SIPs, through mutual funds as well, what is the key factor that one has to keep in mind? Is it the thematic spaces that one has to look at? Is it pure play index funds that one must be looking at? Just for a broad idea, because retail investors have understood that one has to look at long term. But where exactly should that SIP money go?
It's a very important question, frankly, and I think what we have learned over all these years, it's not fair to put, I think, one or few schemes across and tell retail investors to invest in them. Maybe it is equally important to understand what is the objective and the retail investor is creating this
Yeah.
SIP. If that objective is fairly known, then possibly composition of the portfolio for mutual fund of the retail investor can be fairly easily achieved. But I think most of the time people are interested in buying the product, mutual fund as a product. I would call it that I think it is time now because we are already 48,000 crore kind of a fund on a monthly basis and 28,000 crore kind of a SIP on a monthly basis
Yeah.
now. So I would think that I think given that kind of a situation that we are into, maybe spell out your requirement and then work for solution. Buy the solution instead of buying the product. That would be the mantra that I would probably leave on this particular channel today. I think as far as the retail investors' investment approach is concerned on the mutual.
Now, Deven sir, just to prod a little bit on a few key pockets then, the new age tech basket. Just wanted to get a sense because a lot of first time retail investors are really looking at these new age companies as their first go to investment points as well, because they deal with these companies on an everyday basis. They understand a little bit more than the other core businesses as to and they believe in the future of such companies as well. Have beyond Zomato, Eternal, Swiggy, also a lot of other companies started to improve fundamentally, something that had been on the watch list as a concern. How would you really look at what has transpired in the earnings this time?
No, Ben, I think we definitely love this technology business. I think which is basically serving the customer. And as they mature, I think they become more and more, I think, acceptable in the portfolios for sure. Most of these companies have actually, I think, attracted a lot of investment interest ever since they were listed into the market. And because of that, the money allocation which has happened into those companies has been also systematically very significant. In my viewpoint, I think those companies are profitable indeed, but the kind of valuation at which they are quoting is not something which is very easy to digest because if I have to calculate my return on investment on that valuation that I'm buying into, probably I think they are suggesting that I may have to wait for 10 years to get my money double at the current rate of yield. So that is not something which I'm very comfortable with. I'm not very comfortable with the valuation at this point of time. Even though profits and the profit size is increasing, but market valuation is currently already at the peak, already at the scale. And I would think that I think market capitalization of this magnitude should be seen with the respect. It should not happen that retail investor end up buying something very expensive and then start earning, I think, very muted rate of return, I think, in those companies. So that is a concern that one has to keep in mind or keep in mind before buying into some companies. use consumer
Absolutely.
tech, I think, for your day-to-day needs. That is the first thing that you can do. But not necessary that every consumer tech is your part of your investment portfolio. As long as I think you have bought it at a price at which is it is downside is protected, it is good. But otherwise, I think this is going to be a little bit of a challenge.
Absolutely. On the banking space, I wanted your view, sir, since that had emerged as a consensus play so far. It has also played its part in the market recovery of late. There are a lot of things also changing with respect to, policies within the banks as well. Now, we've seen what happened with ICICI Bank a few days ago. They, thought that, to increase the minimum requirement of the balance to be at 50,000 rupees. They've again taken a U-turn last night and reduced that substantially, whereas HDFC Bank has also started to step up its requirement for the minimum, account balance. How are you looking at these changing, thought process of the large cap banks at this point in time? What could have been the key trigger for this, sir?
So for the consumer or the customer of the bank, I guess I think there is no free lunch. Let's be very clear about it. Uh, and these organizations have a business to remain in business. So that is also equally important. If they are raising their deposits, certainly I think they mean that the CASA is taken care of better. Otherwise, I think these banks can come into trouble in the commercial bank. And in this kind of a situation, I would think that I think those banks are proactive in taking these measures. I think they're relatively better off. So I think they probably may demonstrate I think better skill to implement these kind of measures. As far as I think the valuation and other aspects are concerned, I believe that I think these banks are corporate banks, particularly most of them, larger ones definitely for sure. I think are right for a very good sustainable growth in their business. Largely because of the fact that I think the AUM of the AUM demand I think in the country is basically fulfilled by some of these banks. I think through the larger amount of borrowing requirements that the customers are having, and that is giving me a promise that yes, I think the size of the AUM book is going to get doubled every 3.5, 4 years for most of these banks. So we remain confident. Yes, I think we are equally concerned about the liability side and the cost thereon. But I think most of these larger banks will have the ability to build the capital base, I think, through innovative manner. So I would think that one will have to buy some of this when I think the market is giving an opportunity at lower levels. Compelling valuations currently, in my viewpoint, for many of the corporate banks at this point of time.
Okay. Let's also talk the other heavyweights, IT sector. It's been in a downtrend since the earnings began in Q1. This time it's been both large and mid caps and the underperformance there that's got reflected in the stock price performance. But would you say that this downturn has in fact created some space for contra bets on the IT sector and the outlook, or do you think the sector is in for a lot of changes and therefore those who have lesser appetite should actually look away?
So maybe the valuation are attracting people to put in money at this point of time, undoubtedly. And I believe that that's the right approach because I think if the valuations have become attractive, probably it is pricing in whatever negatives that the market is basically talking about or the narratives that they are talking about. In my viewpoint, I think majority of the IT companies are cognizant of the fact that I think they are changing the business model. They are adapting AI. They are matching the requirements of the
Sure.
customers. I think they are matching it well in their delivery side. So, in my viewpoint, I think from a solution base, I think they have already started moving to outcome based activity as far as I think their delivery is concerned to their customer. Given that kind of a situation, I would remain reasonably confident about the prospects going forward. And current price, probably downside is protected. Maybe upside you may not get handsome, but at the same time, 15-20% from the lower level is distinctly possible in a course of 15 to 18 months in some of these stocks.
Okay, got that. Before we let you go and before the markets open, sir, I have to ask you, is it still too early to call out for as to how the Nifty will end this calendar year with? And, what is it that you are penning on a trigger that could reverse the kind of consolidation and the kind of downturn that we've been facing thus far?
So if there is a panic bottom which is made in the current calendar year, the balance part of the current calendar year, that would be the right time to buy into Nifty in my viewpoint. Maybe you can watch out for levels of 24,500, of course, but 24,200 and thereafter 23,800 kind of levels. I think we'll have to watch out first. If these levels sustain, then probably I think it's a time to accumulate around that level. For some reason, if panic fall happens in this kind of market for a variety of reasons, that panic fall should be capitalized, in my viewpoint, I think, for buying into this market.
Okay, thank you so much, Devinsa, and wish you all the greetings for the Independence Day ahead and a great weekend forward. We'll see you soon. Markets have started, so let's focus on that. 24,658 on the Nifty. We are looking at a green start, about a 40 points of an uptick coming in on the markets, and all the sectors have opened into the green, and that's a welcome move that we actually see, a breath of fresh wave that we actually see on the markets. You can see IT stocks really taking it away now, 0.6, 0.7% higher. We were just discussing about the sector with Deven sir as well, where he believes the valuations are definitely attractive for the IT stocks after the recent downturn. Real estate, pharma, mid and small caps are also higher. Autos also in the positive zone, even though there are minor gains on the banking space, but all the sectors are still positive. What's higher on the Nifty? Infosys is leading, a percent gains right there. News flow led impact. I will be just highlighting that for our viewers. HDFC Life Insurance, Wipro, Cipla, Adani Ports, these are the top movers. Let's look at the downtrend. Bharat Electronics, ONGC, Reliance Industries, Hero and Eternal are the top drags right now. What's moving up substantially higher in the F&O space? Muthoot Finance, a 10% uptick really coming in post those earnings that have come in, and that's really the clear focus right now for the markets. What else after the earnings? Jubilant Foodworks, 2% higher with the top movers as far as the F&O action is concerned. On the downtrend, you see HAL, PG Electroplast, HPCL as the top drags as far as the F&O moves are concerned. Let me just highlight for all our viewers what's happening on the top 500 names on the Nifty. On the gaining side, you have names like Landmark Property, that's higher. You also have names like On Mobile Global. You have also Pfizer, that's moving up higher in trade, and also when we look at some Kitex garments kind of textile stocks, so far but few between, but some stocks that are definitely taking our attention there. On the declining side, however, where you see substantial losses, HPL Electric is down. You also have names like SPML Infra, that's actually declining in trade, and some such stocks, Supriya Life Sciences, that's also down, and PPAP Automotives, that's also down in trade. So that's as far as how the markets are concerned. Let me quickly go across to our technical expert, Mr. Mitesh Panchal, joining in with his views on the markets. Mitesh, hi, warm welcome, good morning to you, and festive greetings to you for the upcoming Independence Day. How are you really looking at the markets? We've had 2 days of losses this week. Yesterday was, a good day to end in the green. Will we continue? We have a truncated week, so today is the only day that we have. So 2 days of downtrend. Do you think 2 days of an uptrend will probably come to a zero standpoint, no gains this year, this week?
Good morning, Sakshi. Good morning to viewers, and season greetings to you as well. So the only explanation of whatever you have said is what we advocate is the bottom is in place. Probably it's a bold statement, but let me give you some statistics on that so that I will make or I'll justify my point. Nifty has made an intermediate high on 4th of July 2025 at 25,669. And then for the 6 consecutive weeks on the weekly chart, Nifty had a very bad close. That means the close was in red. Since last 2 weeks on the weekly chart, Nifty has formed its bottom in the range of 24,350 to 24,400. So let me give you a figure. On 8th, for the week ended 8th of August 2025, the low was 24,337. And for the current week, the low is 24,347. So we are of the view that 24,350, 24,400 is a floor, which is not going to get violated sooner than later. And we are of the view that slowly and gradually indices are going to inch up. Now, what is the hurdle on the upside? So 24,736, which was the high of the last or the previous week, is a hurdle. So what we are precisely looking at a close about 24,750. So if Sakshi, the daily chart, on the daily chart, if Nifty give a close about 24,750, it's a clear cut trend reversal. And after that, what we are looking at 25,200 followed by 25,500. So 24,750 is the number which we are looking at. We are of the view that bottom is in place, and slowly and gradually we are inching higher. Probably during the Diwali time, we may be, or we are very clear that probably the indices will be trading in the range of 25,000 to 25,500. So for us, as of now, it's an great opportunity to get into indices. So we are recommending to go long in Nifty, Bank Nifty, Fin Nifty, Nifty Next 50, Midcap Nifty, and Sensex, all the futures. We are of the view that sooner than later, we see a strong trend reversal.
Okay, sooner or later we will see a trend reversal. Bottom is in place. This is the right time to take a fresh entry into the indices as well. Let me now come to stocks, Miteshri. First stock that we are going to be discussing is from the gold financing space, Muthoot Finance. That's the top mover in the F&O space today. Right after reporting its results, the company has reported a 90% year-on-year spike in its net profit that has now come to 2,046 odd crore rupees. That's the highest for any quarter. So a 10% circuit right at the open is what we see for Muthoot Finance coming in. The NII, which is the difference between the interest income that the bank earns for its lending activities and the interest it pays to depositors, has also jumped by 50%, coming in at 3,473 odd crore rupees as well. The NIMs have increased to 12.15% as well. In fact, there has been all across the parameters a clear beat that the street had estimated for Muthoot Finance earnings. We also have brokerage houses update and upgrades coming in. Morgan Stanley has upgraded the stock to overweight with a target price that they have raised to 2,920 now. They believe they have upgraded the stock clearly because there's a group leading ROE and EPS growth. There's also likely ongoing consensus upgrades amid cuts across the group as well. We're also looking at negligible asset quality risk even as the group bad loans are likely to rise at this point in time. So positive reports and good sort of numbers coming in. For those who have the stock in their portfolio and for those who are looking at a fresh opportunity, what would your advice be?
So let's start with the technicals first. So on 25th of July 2025, stock has hit its all-time high at 2718. And after that, we have seen a decent decline to the tune of 2476. Now, after gaining 10% today and the stock at the current level is trading taxi at a lifetime high. So first, those who have it, you can continue to hold the position. Those who want to take a fresh entry, you can also take a fresh entry as of now. But since in this kind of a muted market success, those stocks which are trading at a lifetime high will continue to trade higher. This is our understanding and experience. So we definitely would like to recommend Muthoot Finance even at the current level. The stock is hitting a 10% circuit and trading at 2773.50. So as of now, yes, it's a buy call, but make sure that you ensure a strict stop loss discipline. And over here, the stop loss will be much deeper. At 2476 is your stop loss. So probably around 15% or 18% off downside is your stop loss. So if you're comfortable with such a big gap, then only you should advisable to get into the stock. Otherwise, at a good risk reward ratio, other stocks are also available.
Fair point. Okay. Within the top movers, we have IT stocks, and within that, Infosys is leading the pack. Now, the reason is that the company has announced a carve-out deal in Australia, acquiring a 75% stake in the entity and gaining operational control, while Telstra will have a 25% stake. Infosys will pay Australian dollars 233 million for its stake estimated. That could add about 70 million US dollars to the revenue for FY26 estimated, and 35 basis points to the revenue growth as well for Infosys as well. This is what Nomura has pointed out after the news development has taken place. Nomura has a buy rating on Infosys with a target price of 1880. Let's find out whether the tide is turning for the IT stocks at all, Miteshji, and whether you would look at this as a positive development to take a bet on likes of Infosys.
Yeah, so let us work out the technical section. It is very interesting that the entire Nifty IT index is trading at a very interesting level. So first of all, let's talk about the technicals. On 13th of December 2024, Nifty IT index has made a high of 46,088, and since then it has corrected and made a low on 11th of April 2025 at 30,918. So it was a very good correction. After that, indices have pulled back and again corrected. So if we draw a Fibonacci number, 23.6% retracement comes at 34,499. So 34,500. That is what precisely the numbers tell us. And since last 2 weeks on the weekly chart, it seems that the index has formed a bottom because the low of 8th of August 2025 candle was 34,224 and the current week's low is at 34,228. So we are of the view that between 34,228 and 34,500, the index will form a bottom, and probably from here on, probably a strong bounce will come to the tune of 5 to 7% in the index. So we are talking about a trend reversal here. So yes, from that perspective, Infosys is definitely a buy. Nifty IT index is unfortunately not available in future segment, so we cannot buy it. But yeah, Infosys at 1454 is a buy with a stop of 1420, 1420 for the potential target of 1418 and 1500 in the next 10 to 15 trading sessions.
Okay, fair point. So I hope this has also helped you out, viewers, in getting a clear view. Pharma is ticking higher now. You can see about a 0.9% uptick on the pharma index as a whole. Let me just bring up a few stocks for our notice. So Mankind Pharma is up by 3%, nearly. Oro Pharma, Granules, Biocon, Divis Laboratories, Zydus, Laurus Labs, they're all up and about in trade. So the pharma space is clearly getting into a favorable zone. Any suggestion here, Mitesh ji, when it comes to the pharma related stocks, what's catching your attention?
See, as far as pharma is concerned, we have this fundamental overhang between India and US. So I
Yeah.
think after the corrections, actually many stocks are available at an attractive prices. I mean, case in point, the entire IT sector, case in point, the entire Adani Group, case in point, the entire building and construction material companies like Asian Paints, Astral kind of thing. So I think looking at the fundamental overhang, I do not want to touch it because any good or a bad news will take the trade or will take the stocks on either side of the trade, and the stop losses will be wider. So advisable to avoid this space as of now. Let the dust settle between India and US, and then only we'll be able to take a clear call on this. So as of now, we recommend our client to stay away from the entire pharma pack, be it a frontline pharma or a mid cap or a small cap pharma. A lot of other sectors and stocks are available at a fairly good risk reward ratio.
Okay, fair point. So that's as far as the pharma stocks are concerned. Anything within the QSR space? Jubilant Foodworks is moving up in trade today, and that's after the earnings have also come in, and the stock is among the top movers in the F&O space as well. Do you think you would again want to look at a Jubilant Foodworks vis-a-vis the others at this point in time? In case, I could also highlight for all our viewers that CLSA has come out with a report on Jubilant Foodworks. Here they have an underperform call rating with a target price of 519. They believe the Q1 standalone sales have grown by 18% year on year, which is in line with estimates. They believe the gross margins, however, have contracted by 199 basis points to its lowest level in over 30 quarters. Sales per store have grown by 8% year on year, with Domino's India LFL growth at 11%. Although they also highlight that EBITDA has actually missed the estimates, and therefore they are also slashing the FY26 to FY28 estimates by 5 to 11% to reflect higher costs going forward. How would you look at Jubilant Foods and the rest of the QSR space?
So as far as Jubilant Food is concerned, I think it's a clear-cut buy, Sakshi. As far as technicals is concerned, probably fundamental might have a different view on that, but technically stock has sustained above its immediate resistance level of 620, trading at 660 right now. So we are of the view that yes, there is a bit of an upside available in the stocks. So one can go long in Jubilant Food with a stop of 620 for the potential target of 680, 700. So this is what the technical setup is indicating, both on the daily and the weekly chart. The setup is pretty strong, and I think the delivery based volume is also picking up. So yes, at the current level, Jubilant Foodwork is a buy.
Is a buy. Jubilant Foodworks is a buy. Technically, there are strong indicators that you can continue to buy this stock at this point in time. Since we are talking about consumption, let's also speak about the liquor space, and we'll also talk about the retail space also in the same breath, because that will give us an all-across understanding of how the consumption theme is also panning out to be. United Spirits within the liquor space came out with the earnings. Net profit here was down by about 13.7%. Revenue up by about 8.4%. Although operationally, again, the EBITDA figures has seen a decline of 9.5%. Margins have come in lower at 16.3%. What does that indicate? One is that, and of course, let me also highlight for the retail pack as well. Aditya Birla Fashion Retail and Vishal Mega Mart both have come out with the earnings. For AB Fashion and Retail, we've seen a consolidated revenue of 1831 crores, up 9% year on year. EBITDA has jumped 38%, so a strong improvement in the operational profit for Aditya Birla Fashion Retail, the operator of pantaloons, by the way. The company's net loss, however, has actually come in at 234 odd crore rupees. It's come down from 238 odd crore rupees in the year ago period. That's Aditya Birla Fashion. Vishal Mega Mart, the profit after tax has come in at 215 odd crore rupees, and we have actually seen an uptick of 37.8% there on a year basis. Revenue has also increased by 21%, coming in at 3,140 odd crore rupees. So let's discuss this overall, the consumption theme. Retail space at the one end, liquor space at the one end. We've already discussed the QSR space.
Yeah, so I think chartically, if you look at it, let us talk about first the United Spirits. So I think a very strong sell-off from the level of 1644 from the month of June. It is forming lower top, lower bottom formation. And I think now it is about to pause because the recent low was 1276 and the stock is trading at around 1300 level. So we are very close to the bottom. But Sakshi, having said that, it's not a trend reversal, right? We are talking about bottom formation. So here we'll have to wait a bit. Now, as far as the other retail space are concerned, like AB Fashion and the other stocks which I mentioned, including the QSR space, we are of the view that there is no sustainable trend reversal in this. I mean, for a quarter, you are getting a good number, and because of that, the stock is moving up. But in the next quarter, again, we see a sell-off. So I think we are not getting comfort of sustainability with respect to the price. And even if you look at the volume front, I mean, the delivery-based volume is not picking up. It's all about the intraday participation or the short-term participation, which is buzzing the stock. So with that perspective, I think advisable to avoid the space right now. Space might look interesting from the short-term or the ultra short-term viewpoint, but again, the trends are fizzling out if you take a monthly view or a quarterly view. So advisable to avoid the space, as I said continuously, that many spaces are available, Sakshi, as of now, wherein a swing trade can give you 10 to 15% at a very attractive risk reward. So I think our eyes are on those stocks, not on those stocks which are fancy in the nature, which says that, okay, today or tomorrow I will perform, and then probably there is a question mark.
Okay, got that. Let me also just look at what else can we pick out for all our viewers to really see. Let's talk broader markets, Mitesh ji. How are you looking at the broader markets pan out? There's been extreme amount of volatility there as well. Mid caps, small caps, even micro caps. How are you approaching these spaces?
So I think the best comfort is what we are getting right now, Sakshi, is in both micro cap and small cap. Reason being is this, that because of the one or the other reason, majority of the stocks are beaten down and now available at a very attractive prices. For an example, let me give you a few stocks. Bodal Chemical. So if you look at the entire chart pattern of Bodal, for an example, so recently the stock has made a high at around 81 level, and then a crackdown in last 4 weeks, and now available at 66 rupees, which is pretty interesting. For an example, IFCI. So even if you look at the chart pattern of IFCI, the stocks after hitting its recent high of around 74 corrected to the tune of 53. Then if you're talking about Infibeam Avenue, so Infibeam Avenue is again in the recent past has made a high at around 22 and available at 14 rupees. So there are many small cap stocks which are beaten down in the recent past, which are available at a very attractive risk reward ratio. So these are the stocks actually which we are recommending to our clients. And I think in this, the margin of safety is higher as compared to the other spaces like QSR space, or for example, AB Fashion, or the stocks which I have discussed right now. So I think as of now, the bottom up approach is working pretty well. And majority of the stocks which we are recommending to our clients are basically coming from the small and the micro cap segment. where the margin of safety is very high.
Okay. First 15-20 minutes out of trade, we are just flat now at 24,620. The momentum seems to be dying at this point in time within the first 15-20 minutes odd trade. Miteshji, how would you look at the market and what would you do?
So I think these are going to be the course of the days actually going forward. I think in the initial stages you might see stocks or the indices are going up and then consolidating. But we are of the view that finally the indices are preparing for a strong up move. We all know that market will not give you a chance to participate on either side, either on the buy side or on the sell side. So advisable to be on the buy side right now. We are of the view that the frustration period will end up making a good money. So keep we are accumulating index at the current level, and we also have to look at the globe charts. You see, the world markets are trading at a lifetime high, and we are at that point of time trading at a lifetime high. So I think there is a catch up really going forward. Probably we are muted because of the one or the other reason, but going forward, the catch up rally will take place for sure.
Okay. Let me now come up, and see what else is actually. In fact, most of the market is now slipping into the red zone. Let me highlight where the weakness is coming in from. Metals that were shining bright yesterday, down by 1.3% lower now. Oil and gas, 0.6% lower. Real estate has slipped by 0.3%. PSU banks also down in trade. Autos have slipped. FMCG is down. And you also have the broader markets that are down. Only pharma, IT and financials, Nifty Bank overall and consumer durables. That's where we can continue to see some gains protected, but rest of the market is also dwindling into trade. Miteshji, apart from the stocks and sectors that we've asked you, any other pocket that has actually given you that buy signal right now in terms of either a sector, a theme or key stocks?
So I think we have discussed this thing in past as well, Sakshi. Commodity is where we are absolutely
Yeah.
comfortable. So the first what we are looking at is a sugar. The second what we are looking at is a specialty chemical. The third what we are looking at is fertilizer. The fourth which we are looking at is metal. So I think any dip in these four sectors and the stocks are definitely a buy side trade formation for us. And we are of the view that as far as 2025 calendar year is concerned, it's all about commodity going forward. So that is where we are comfortable. Second thing where we are comfortable are probably the auto space in two stocks from the auto space. First is Maruti. After a long consolidation, now Maruti is inching up, and going forward, we see a very strong up move in Maruti. And second, even after a very strong and a boring consolidation phase, Ashok Leyland is also coming up and slowly and gradually for making its way at around 120 level. So probably we may see 140, 150 level. And Maruti is really going to surprise in the second half of the year. Probably in the
Okay.
next 3 or 4 months, Maruti will definitely surprise us. So these are the two stocks which are looking from the auto space.
Okay, got that. We'll note all of those stocks down as well, viewers. So keep an eye out on that too. Since you took the name of sugar, I also wanted to ask you on a specific stock, Praj Industries. Now, this stock has actually seen some pain in the recent, days as well. This used to be seen as the best proxy play for any sugar move. Today, it's up by about 1%, but we have actually seen this stock sink by 9% to 52-week lows after its Q1 profit plummeted by 94% year on year. How would you look at this stock, Miteshji?
So if I have, I will definitely sell at the higher end of the range because it's a complete crackdown. The recent support of 448 has also been cracked down. So stock is available at, I mean, yesterday's close was 404 rupees. Today might be available at 410. Any bounce going forward, actually, should and must be used as an exit opportunity. I am of the view that stock will finally test its recent low of 323. So I'll not touch up the stocks right now because on any chart pattern, whether you talk about weekly or monthly or daily, it's a clear-cut weak structure which advocate weakness going forward. So weakness is likely to persist. You may find 5, 7, 8, 10% of a dead cat bounce, but that should and must be used as an exit opportunity.
Okay, fair point. Let me just quickly look at what else can be discussed right now. Let's also pull up some of the banking names then. That's a space that we haven't discussed too much. Within the banking space, Miteshji, what is giving you comfort as of now? Is it the large private sector banks that have so far played a large role in the market's recovery? Or is it the PSU banks that have not participated as much, are giving you that signal that right now is the right time to look at it? Or NBFCs at large? What is giving you that confidence within the banking space?
So clearly, it's a private bank which is giving us the confidence. And among these two, earlier we are talking about Sakshi, HDFC, and Kotak. We have dropped Kotak. Now Kotak is replaced by Axis Bank. So now HDFC and Axis is looking pretty promising. As far as NBFC is concerned, I think the space needs a lot of time for the consolidation. PSU Bank, a complete boring story, needs also a significant amount of time for the consolidation. So as of now, among these three, if I have to place my bet, I would like to place my bet on private banks. That two top picks. First is HDFC Bank, second is Axis Bank.
Okay, fair point. Let me just highlight for all our viewers what else is ticking higher in the trade right now. After Muthoot Finance, which we've discussed, Newgen Software is moving up 7.5% high after a long haul. Again, this stock is coming back into focus. Last couple of days also was on the positive zone. Pfizer is up by 5.5%. GMDC is higher. You also have Endurance Tech that's also moving up in trade. Bajaj Housing Finance is also taking on the positive zone. We have Vishal Megamart at a 52-week high. Muthoot Finance at a 52-week high. Indigo is also ticking higher. That's something that we can definitely discuss. Interglobe Aviation, Hyundai Motor again at a 52-week high as well. Delivery, M&M, Apollo Hospital. These are all the names that are actually ticking higher at the 52-week high levels as well. So let's discuss this one by one. Let's first come to the aviation aspect. Indigo, and right now trading at 6,029 odd levels. It's had a fairly decent move in the recent past. Your suggestion here, and of course within the entire tourism hospitality basket, what beyond even Indigo that you could highlight for us?
So as we have also earlier discussed, Sakshi, aviation and hotel go hand in hand. So
Yeah.
once there's a aviation space which is moving up, the hotel space will definitely move up.
Yeah.
So if you look at the entire chart pattern of Indigo from the level of 3,830 on 14th of November 2024, it's a one-way ride and the stock is forming higher top, higher bottom formation. The most interesting thing is that probably going forward, stock may continue its upward journey, and we may see a level of 7,000 to 7,500. So we are absolutely upbeat on this. Any dip going forward should be bought into. So this is one thing. Second is that Indian hotel is looking pretty interesting, Sakshi, at the current level, because after forming its high at around 894 level, stock has gone for the consolidation phase, and since last 2 weeks, stock is making an attempt to clear its recent resistance of 778. So we are of the view that Indian hotel is also should be on your buy list. So both Indigo and Indian hotel definitely at the current level would like to go long in the stocks.
Okay, got that. So that's the tourism basket that we are looking at right now. Let me also just come to these, software makers, Newgen Software. How are you looking at this stock? This has been a very volatile space of late, but is anything ticking positively for some such stocks?
Not exactly, Sakshi, because see, in this kind of a market, what is the where is the where the comfort is not coming is the delivery based volume. I mean, majority of the stocks are supported with the intraday volume, and you never know when this hot money will disappear. So I think you have seen that in case of PG Electroplast. I mean, such
Yeah,
a great crack in
absolutely.
last 1 week or so. So be absolutely careful in all those new stocks which are making sudden highs and a very rapid up move, because probably we are of the view that at the high level distribution is going on rather than accumulation. So I think I mean we have seen that in case of PG Electroplast there are many more stocks going forward which may see the same pattern. So as far as new gen software is concerned, at 7% I am not a buyer. If you have, you can sell it, but try to avoid this space.
Okay, got that. Meanwhile, let me just highlight for all our viewers what you must track is from the primary market action. There's going to be JSW Cement's listing today, and we've already seen how the stock is now settling in at 153 rupees against the issue price of 147. So there is an uptick, but a mild uptick at that. All-time plastics is another one that's slated to list in trade today. That one is looking at a 14% premium listing, and we have seen that the issue price was 275 odd levels for all-time plastics, and right now it's indicative of an opening at 314. That's how the pre-open trade is indicating for both these stocks. Two new debuts today. JSW Cement at 153 could be making a debut, about 4% higher from the issue price, whereas all-time plastics 14% premium listing could take place, as is being indicated right now at 314. In case you've got the allotment, you have an idea of what kind of a listing move do you expect at the first tick today. So that's the primary market move. Mideshji, anything from the recently listed IPOs or recently launched IPOs that you have probably shared a guidance with all your clients?
No, Sakshi, we are not a big fan of an IPO because if you look at any IPO story, I mean, post-COVID, give 3 years and you get the reality of the company. So I think the best practice what we have observed is that let the IPO get listed and spend quality time of 3 years on the board, because by the end of 3 years, you will have 12 quarters of results. Okay, because 1 year is 4 quarters. So 12 quarters of results will give you a fair idea, and you have a fairly a good amount of technical history as well to guess where it is moving. So now probably we are a bit interested in Hyundai Motors, because after listing, the stock has spent a quality time in consolidation and moving up. So the idea is not to jump immediately. Wait and watch for a year or so. You will get a fair idea, and then probably prepare yourself and then jump into that IPO. So we are not a big fan of subscribing the IPO or recommending it to our clients.
Okay, fair point. We are inching closer to wrapping up the morning edition, but before we let you go, one more stock that's come onto my radar is PVR. I wanted to ask you on that because two movies releasing for the weekend, Coolie and War 2. Which one are you going for, Miteshji?
So I'm not a big fan of a movie because Sakshi, because of the OTT platform, would like to sit at home and watch the series. I'm not a big fan of the movie, but looking at the kind of consolidation and the big crackdown which PVR has recently, I think a bounce of 5 to 10% is on the card. So the stock may move up to 1200, 1250. So yes, at the current level, the risk reward ratio is helping us with a stop of around 1010, 1010. One can go long at the current level for the potential target of 1200 to 1300.
Okay, fair point. All right. Miteshji, any last word on the market straight for today? Because we have a truncated action, 3 days of a long weekend, and then we come back after that. And in the interim, we will have cues from the US, Donald Trump meeting Putin. We will also have cues from what Prime Minister Narendra Modi speaks tomorrow in the Independence Day speech. And of course, how the global action really pans out tonight and then tomorrow night. So we'll have 2 days of, move to react to on Monday when we open. Any strategy that you would want to advise?
So you can go long in the index, no doubt about it. If you do not want to take a risk of a long weekend, you can go long in call, and by buying the out of the money call option, you can go long. But Sakshi, we are moving into a truncated week with the low expectation, right?
Okay.
And whenever
Okay.
there is a low expectation, market will always surprise you very badly. So we are of the view that market will surprise you positively in the next week. So we are buying it, and we are buying it very heavily as of now, but only into index. So we are of the view that in the next week, we may see an extraordinary trend reversal. And let's hope during the Diwali time, when we are celebrating the festive season, our markets are also trading at a lifetime high.
Okay, with that hope, we will actually end this show now. Thank you so much, Mitesh Ji, for being with us with such brilliant insights like you always share for all our viewers. 46 points higher, we've recovered from the day's low point. That gives us more confidence. 24,664 on the Nifty right now. We're at the day's high point, 0.2% uptick that we can actually see on the markets right now. What is getting the contribution on the Nifty right now? Well, it's Infosys that's clearly contributing positively. positively. You have all the private sector banks, ICICI, HDFC and Axis Bank contributing positively. Bharti Airtel, Maruti and HDFC Life are other top contributors on this recovery. IT stocks, pharma, financial services, consumer durables, these are the top moving sectors right now, with Infosys, HDFC Life, Wipro, Dr. Reddy's and Maruti Suzuki among the top movers, whereas on the declining side you have Tata Steel, ONGC, BEL, Hindalco and Adani Ports also seen on the declining side. Well, stay tuned on to Business Today Television even as we wrap up Market Today morning edition. Viewers, that's after that you will be able to see JSW Cement's live listing, and of course we'll continue with earnings conversations, a lot of IPOs that are hitting the D Street, and 12 noon we will answer all your queries on daily calls. Stay tuned for that.